Hey traders, welcome to Profiling to Profit, the week ahead in futures. It is November 18th, Friday, 2016. After the market closed, I hope everybody had a good week at the markets. It was another week and really another weird time in the marketplace. A lot of different things are happening. The indices after the U.S. election have returned to hibernation. The dollar soaring, gold's dumping. Crude's trying to find their direction. There's a lot of things happening in the marketplace, and we suspect it will be a little weird into the end of the year and maybe even further. We just don't know. Everybody's pointing the finger at the new president, Donald Trump, or should we say the president-elect, Donald Trump. But you know what? There's a lot of excuses out there, and you can get wrapped up in all those excuses and all the news. And as traders, we suggest turning all the news off and focusing on the markets and see if there are opportunities out there. So let's go ahead and let's do that. Let's go ahead and take a look at the economic calendar next week. If you are not in the U.S., just beware that we do have a major holiday here in the U.S. next week on Thursday. It's Thanksgiving here. I wish everybody a happy Thanksgiving, of course, whether you're here or whether you're around the world. May be a good time to take some time with your family and just be thankful for the things that we do have and the opportunities that we do have, especially here in the marketplace. However, light news this week. I think the only thing really to note is we have FOMC minutes on 2 o'clock on Wednesday. Now, with it being 2 o'clock on a Wednesday afternoon, the day before a holiday, I don't expect many traders to be in. I think they'll be long gone by then. Some wirehouses and some commercial paper may be in there moving, shuffling things around, but probably something you don't want to be messing with. And with that, I'll just say this. Any of the zones that we have this week, if they do not trigger by Tuesday close, we will not be triggering any trades after that. Wednesday, we will watch and we will manage any trades that we do have on. Thursday, markets are closed, and Fridays, even though they're open, we will not be in at that time. So just FYI, around the world, the same is happening. Of course, now Draghi is going to say something on Monday. Other than that, we just have a couple pieces of news again out of the durable goods order out of the U.S. and FOMC minutes on Wednesday as well, and the rest is just yellow across the board. So pretty light across the whole week. So expect maybe some movement early in the week, and then after that, we are probably going to see muted ranges and muted volumes going into the holiday. All right, let's get over to the marketplace. The NASDAQ. We were watching two zones last week on the NASDAQ. We said we could fade both the lower and the upper zone. The lower zone wouldn't have given us a trigger. If you were taking the edges, you would have been triggered into this and had a really nice trade and could still be holding on to it. However, the upper zone would have triggered today. We did not take this trade. I'll explain why we did not here in a minute, but we did not get that trade short. Now these zones here, we're going to change these zones up for us. We're going to keep the same zones. If price moves above this zone, and by the way, we almost had an inside week, which would be pretty significant. We like inside weeks because the following week, typically we have some movement outside that week. Now, again, regardless of the inside week or not, if price moves back above the 48.50 area, this zone will act as the buy zone to the upside, and then just the opposite to the downside. If this zone, if price breaches the 46.51 area, then this zone here will go ahead and act as the resistance zone for a trade to the downside. So keep an eye on that. So why didn't we take the NASDAQ trade? Well, this is why right here. We are very leery when the indices are a bit broken and we have some divergences. Let's go back and look at the NASDAQ here. NASDAQ was fairly range bound. Now, even though it started at the POC the following week and then went down, tested the lower area, and then of course swung all the way back and tested the upper area, pretty range bound here. So while that was happening, the NASDAQ, or excuse me, the Russell was making new highs again all week long and just going in fuego. I mean, the place, it's going nuts. And so we're shocked to see money rolling into this at this time, and we knew that the Russell would probably catch up and make new highs, which it did the following week or the previous week, but we didn't suspect it would continue on up this way. Again, this is why you also use triggers when you get into this, because if anybody's short in this area that may have thought they were going to get triggered in and go against some resistance up here, if they're still holding on to this trade, they're just getting hurt pretty bad. So we use triggers, we define our stops, and if it doesn't work, it doesn't work. We look for another opportunity, and we go ahead and place triggers in there, and hopefully to get a good trade. So this is why we did not take the NASDAQ short, because if this thing continues to go, then that NASDAQ will eventually get pulled up as well, and we don't want to be holding short something that we're going to get rolled on pretty hard. So in this case now we're coming into the week where we think it's a shortened week as far as trade is concerned, and what we want to look at here is that will the Russell go sideways to down, and if they come back into our zone here, the zone is 1279 down to the 1260 area, and if it does get down in here, we want to trigger long into this, see if we can take out this 1316 area. Now something also to note, we talked about this in the Slack channel today, and if you're not in the Slack channel, look for our tweets that invite you in. We talk about a lot of different things. Something that's happening in the Russell, and you guys need to be aware of this, is the ICE exchange has just placed the multiplier on this on price multiplier change on the Russell. Now what this essentially means to you, and you probably should go into the ICE exchange and get this document and read it all, but essentially what it's going to do is it's going to change the contracts from $50 per index point, or excuse me, from $100 index point down to $50 per index point. So what does that mean? Each tick right now in the Russell 2000 index is $10 a tick. That will change to $5 a tick. Now, a lot of speculation of why this is going to happen. Could it be related to the data feed changes that they made recently, and a lot of people jumped ship? Could it be because there's less volume going into the Russell at this point? I'm not real sure, and I'm not here to speculate. All I need to know is when it's going to happen. It's going to happen December 5th, of course, if the regulators approve it, which most likely they will. And there will be other things that will be affected by it, and including the margins on this. So you'll need to watch the margins too. So with that, this will be a different ball game. We'll see if it puts a little spice into the Russell, and we'll see if more volume comes into this exchange and or this product, and see if it maybe we get some interest there, because right now not a lot of people that we know trade the Russell. It's a good trade, but it's just not a very popular trade. So anyway, that's enough on that. Watch the zones here. This thing's crazy. It's you know, why it's happening is irrelevant. There's a lot of speculation. It could be people are moving into small caps, looking for better returns. The Russell has returned better this year than the other indices. It shocks me when I hear somebody say dividend returns in the Russell. I don't believe they're as strong as they are in the other indexes, but I don't have research to support that, so I can't say that. Here's what I do know. We have a zone down here, and if we trigger long, we're getting long, and we're going to manage our risk. So let's move on. The ES. The ES, while the NASDAQ was fairly balanced, and the ES did move outside of last week's range and closed right at the highs of it. We have a zone now on the ES, which is 2164 down in this 2150 area. It's a 14-point zone. Really like this zone. If we can get back down in here, I'm looking for a trigger. The ES is high on my list right now for opportunities, and then we look for a test of the 2191 as a first target on this. I like this trade. I think this has high probability here. Especially now that we're poking up here close to this high. I think it wants to test it. Hopefully we get a chance to trigger into this. So watch that zone. All right, let's move over to crude oil. Crude oil had a engulfing week. Now this is great for bulls, especially the way it happened. We poked our head down below this zone. They looks like they took out some shorts down here and reversed it. Now also I'll say this is probably due to some news out of the Middle East, and I got to make you aware of the OPEC meeting on November 29th. And between now and November 29th, there's going to be a lot of things leaked in the media, and it's going to say, well, they're close to an agreement, OPEC is, to halt production, or, all these kind of things are going to come out. And just understand we may get price spikes from time to time. So if you're trading crude, just be aware that a spike may take you out at some point, and you can't get mad at it. You just have to understand the risk. That's why it's important to manage your risk. Now, once this came back into last week's range, this could have been a trigger itself to get long. We did not get long here. However, we did get short. Now you can't see this, so I'm going to get rid of this color here. But we got a spike, a price spike up to this high zone. As you can see, here's the zone. We had a price spike to the high of the zone. We did trigger into this thing. We got 2 targets off and got stopped out of the last target. Right now, this is feeling fairly bullish in here. We will wait and see if they continue to go sideways, but a move outside of the zone and above it, then this thing could be off to the races to the upside. But again, just a word to the wise, there is news coming out. The OPEC meeting is 11/29 of this month, and there will be some leaked information and a lot of people speculating and saying things, and that could spook a market. So just be careful about that. Other than that, we're not going to use this zone. This zone is gone, by the way. I would say that above this area, above this week's high, then this thing has a chance to get legs. We'll wait. We want to see how this reacts this week, see if they have follow through here, or they bring it back down the range, and wait for that OPEC meeting. So. All right, over to Goldie. Goldie, oh my goodness, Goldie. Let's first of all take a look at the dollar index real quick here. All right, the dollar is going nuts. We've been talking about this for a while now. We have been bullish on the dollar. We didn't know it was going up here, but we had a good idea that it was going to be heading north, and it has been. And when we say gold goes north, when the dollar goes north, gold goes south. And that's why we've been very bearish, especially after this breakout here when we got this tremendous trade that we were watching. We did get the pullback, but this was a pullback that unfortunately went back into blew through our zone and got back in the range, and we took the trade off. If you did get short in here, you have a phenomenal trade going, and I hope you're still holding this, because this one's good. Could make your year. It would definitely make your quarter. There's no doubt about it. And let me just say this as a learning experience here. Here's an opportunity, and this is the type of trades we take. When you get an opportunity, we're looking for big opportunities here. We're not looking for a point or two. We're looking for a multiple of points. In the case here, our stop never even got close to being touched, and this was just a nice move straight down. And again, we knew we were looking short, but unfortunately we had a week where it gapped up. And by our rules, when it gaps up and goes above our zone, the trade is off. However, it did work out, and for some of you, and I know a couple of you who did get short, I hope you're hanging on here because we're making new lows. That's a trade from about the 1300 level down to 1208, and probably going to go lower at this point. So where are we at currently? Well, we're looking for another opportunity to get short. We don't believe this is done. We think the dollar is still going to continue up. And so we're looking at a zone here on gold from the 1245 area up into the 1256 area. Gold could go sideways to slightly up, and it could take a week to get this one, or maybe even 2 weeks. Now, if we get a big spike up into here, if we do not trigger this trade by Tuesday, this trade is off until the following week, and I'll wait and look at it this weekend to see if a new zone has set up. But right now, this is the zone for the downside. And here's the great thing: if we do get the zone to the downside, we have a couple magnets down here. We've been watching the 1153 and of course we just hit the 1208, which we thought would be hit. Now people thought we were crazy when we said this gold's going to end up falling out of bed. We like gold short. They said there was no way. George Soros is long. How can you go against George Soros? Well, we don't go against anybody. What we do is we go against what the profile is telling us. We go with that, and that's what helps us find these opportunities. And when we see them, we just manage the risk and go from there. We don't care who's long. We don't care if it's George Soros. We don't care if it's a country. We really don't care. Okay, because not just because those guys are long or short doesn't mean they're right. Now remember, their time frames can be a lot different than ours. They can hold on for multiple of years. They have unlimited pockets, and they can hold this thing for multiple of years, and they could be right. We're not looking to hold multiple years. We're looking to hold multiple days and maybe even a few weeks out. So look for the zone in gold. We think gold still has some more downside, but it does need some rest after this monster move here. So, all right, let's move on. All right, the euro is a lot like Goldie. She's toast. I mean, when we got short originally, we thought that okay, gold would go down and end up testing this lower level or this lower zone down here, not a zone but a lower support level. It bounced back up. We got out of the trade again, similar to gold, and then it rolled back over. We were not able to get back in, honestly. We looked for a couple zones. You know, the euro is like gold. When it gets going, it goes, and it doesn't pull back very far. Again, we're looking for more opportunity to get short here. We would love an opportunity. Right now, the zone is 107.04 up into that 107.55 area. That's a fairly good size zone, but we got to give it some breathing room, of course. If we are able to get short into this zone, this target down here at 105.49 and then 104.60 are really big magnets here. And I want to pull this out a little bit and show you this. Let's go to the daily chart. All right, if we break these zones, and these are just old lows, if we break this zone, this low down here at 104.63 area, that could spell some big trouble for the euro. This thing's been going sideways for a while. This thing could become, I mean, really get hurt down here, and quite amazing what could happen. But the same thing is with gold. I want to show you gold. We think that there could be a bigger move happening in gold here. Especially if we get a bounce and we break again, we come down and we're right on this area right here right now, the 1208 area. If we get legs below that 1208 area, we have a gap down at 1155, and that is not too far-fetched to see that price move that far. We've seen two big monster moves here, and when gold does fall out of bed, it typically falls for a long time. So there could be big things happening for the euro and gold here, so we got big eyes on that right now. All right, let's go over to the notes and bonds. Boy, this is another one. Just like gold and just like the euro, we have two levels that we're up against or we're going up against here. And these levels are going to act as our zone right now to the long side. But it's going to be a short-lived long side because we really want to be short the notes and the bonds. We had this great trade on the notes coming out of here. It rolled back up. One ticked us on our zone to get short. We did not get involved in this one. We wish we would have. It would have been great. And then it just absolutely rolled out of bed. And this is a huge trade. And I wish and I hope everybody got this because we did not. And the same thing's with the bonds. I want to show you the bonds as well. Bonds were almost a bigger trade. You'll see here that I still have the trigger zone to show you guys. This short came back up and one ticked us. If you trade the edges on triggers, you got this trade. We did not. We have to wait till it enters our zone and then triggers us. And I don't want to get the email saying, well, you fool, you should have been in that. Well, that's not our plan. We only trade by our plan. And when you trade by your plan, you will miss certain things. Now, again, if you trade on the edge, awesome. You had this trade, man. Again, this is a trade like what we talked about in gold, and we, this could be make your year. It definitely should make your quarter too if you got involved in it. So this is a monster trade. Now let's go back to the notes and see what we got. We can't chase the trade down here. So we have to be careful and we have to look at a zone. Now I'm going to put two zones out here, for one for the long side and then one for the short side here. On the downside, we're looking at the 125 110 area down to the 124 160 area. This is a big zone, guys, but we need to give this some breathing room in here. Now to the upside, I have this zone right here, but I'm going to take that off for now. I said I was going to give you a short zone. I'm not. Okay, I need to wait a little bit. We need to see where this is, because this thing could just all of a sudden roll back up with some type of weird news, and I don't want anybody to get involved to the long side, or excuse me, the short side, or get stopped out because of a stupid news event. This was our old zone. Okay, and we were going to leave this here and said, hey, listen, if we get a bounce back up, we'll take a short in here. But here's the thing, they blew through this zone. This zone doesn't mean anything to these individuals. We do have the POC here. That's one thing that we got to watch, and this is the POC on the bigger profile here, right here. So we suspect there may be some sideways movement and touching this stuff, but we're looking right now for a movement into this to get long. And if it's long, it's probably going to be a short-lived long, so this isn't going to be a huge trade. We're not looking for a major reversal here. We still think there's more downside to the bonds and notes. And again, let's go back and take a look at this. We have two major levels here, which is going to make up our zone. And if this zone doesn't hold, bonds and notes are really in trouble. Really in trouble. So let's go over the notes here, or excuse me, the bonds real quick and take a look at those. Just like the notes we were talking about. Here's our old zone, didn't even get close. We'll take that one off. Our new zone down below is the 151.14 area, or excuse me, 151.11 I have on my notes, and then all the way down the 149.16 area. Great looking zone. The bonds are dragging just a little bit behind the notes as far as distance is concerned, but the bonds could be the trade, and we're going to probably watch the bonds a little closer than the notes this time. But take a look at those, watch those zones. Let's move over to the grains to finish this up this week. The grains, we saw again corn break below this our line in the sand zone at the $3.45. This week was a very narrow range in the grains. We did pop back up, and we closed right on that level of 345. This is a very important level. We're leaving this in here. If price moves back into this range next week, we'll see if we can find a zone to maybe get long. Right now, we're just not so interested in the grains, and the reason is they're just right now unpredictable, just back and forth. And we want some better opportunities to be able to place the money to work for us. Again, here's soybeans. Soybeans didn't do anything. Oops, let me go back to the 2-hour chart. I'm sorry. Soybeans did not do anything. I mean, it's a very narrow range. Now, they are hovering to the bottom half of the previous week's profile, which would, you could consider that bearish, but for the most part, this is nothing. We're right in the middle of all the junk that we've been in for a while. Just no need to play in this zone. There's no edges we can see. We're looking for a bigger trade, and it's just not here right now. So with that, I know I covered a lot this week. There's a lot to cover. We do have a shortened week. I'll remind you of that. Again, get over to the ICE Exchange, read the new price multiplier information. That's important if you trade the Russell. Also, guys, if again you're struggling or have any questions or anything, just reach out to us over here at the Market Profile Trading Academy. Just hit the contact us. If not, if you don't have questions and you're just looking for some good information and free resources, we have a ton of them on the page. Go to free resources right here. Scroll down to the bottom portion on the right hand side, and we have loads and loads and loads of information. The other one would be to get on our Slack channel and communicate with us every day. We do not give out trade recommendations. We talk about the markets, and we give lots of examples and help educate you guys. So for that, have a great week, and for all of you around the world, I wish you all a happy Thanksgiving. Take some time to just just give thanks for what you have and the opportunities we have, because we're lucky. We're lucky to be able to be in front of these markets and have this opportunity where there's people who don't have that opportunity. So be grateful for that. Have a great, blessed week, guys. We'll talk to you later. Take care.